Oh, hello and good afternoon. I welcome you to today's Trading Spotlight webinar here together with Admirals on a Friday. It's the 1st of October 2021, and today we want to dig deeper into a very trading related topic. In fact, active trading related topic, probably a better way to put it, scalping. And here's scalping with pivot points. I have a personal anecdote to tell you in the upcoming minutes here in regards to the pivot points in general, and how they mainly affected my way of finding the way into the world of trading, respectively into the world of technical trading, in fact. So when I first was introduced here to trading and technical analysis, in fact, pivot points caught my attention right from the start. But the anecdote a little later. Before I start, if you watch now the recording on YouTube, please feel free to subscribe to the YouTube channel so that you don't miss any of the videos which we are producing here for you to hopefully affect your trading in a positive way. It's not just me running webinars here together with Admirals, but also my dear colleague Paul, and also Marcus running his morning show with some thoughts on the trading day. So again, subscribe to the YouTube channel. Please leave a thumb up here if you enjoy what you're seeing. For all those right now here live in the event, I'll just type in "Hello traders" into the chat box. This is the place to go when you have any questions you wanna ask. So feel free to shoot them over. Yeah, so let me just share my screen here with the first slide, and then we take it from there with a short introduction here, in fact, on who Admirals is, currently rebranding. So if you haven't yet heard it, then let me just go here with you quite quickly through the current rebranding taking place and what's the reason behind this. So Admiral Markets rebranded to Admirals here several months ago already, and you may know Admirals as a Forex and CFD broker in this context, and offering a wide range of financial product services, especially in regards to CFD and FX trading here, and known right now also as a multi-asset broker, physical stocks, for example. In the invest solution, you can trade them without leverage, plenty of ETFs you can invest in also in the longer term. And so you can already see it's not just a place where active traders meet or where active traders find their place to be when it comes to their day trading, but also it's a place where investors now find their way into the markets, and they get a great partner here to invest some of their funds into the markets longer term. And beside of that, there's also some further financial services which are offered now. For example, a credit card you can get access to. There's some plans also in the crypto space. So crypto trading here is not just from an active perspective, very interesting, but also from a, let's call it, wallet perspective. Probably there's some news in the line. In fact, you will rather sooner or later come across them if you follow the action in the FX CFD / multi-asset brokerage space closely. And so that being said, this is the main reason why there is this rebranding taking place. Fully regulated broker. So for plenty of years, as of now, as you can see here, there's another regulatory body which now oversees the business, which is what can be found in Jordan in this context. So one word, one broker. Very important to note. My background is not just trading related, but I also worked in a bank in the retail sector classically, and then went through a traineeship after I finished school 20 years ago. So you can see that was the time when I had a little more hair. Yeah, and why do I mention that? Well, I came in contact every day with clients, and what I can say is there was also sometimes an international clientele, and they prefer to talk to someone in their native language. Why is this noteworthy? Well, with a broker who has offices around the globe and is a global active broker in this context, chances are very high that you find someone once you call the broker here in your native language. I mean, English is obviously not a big issue, not a problem, but some of you probably say, yeah, English is okay, but still I prefer to talk in X, whatever that might be then, and talk in my native language. I just feel more comfortable doing that. And yeah, with Admirals, a broker who has offices around the globe, chances are very high that you will definitely find someone who can answer your questions in your native language. And Now let's dig deeper into today's topic. Wait, let me just, yeah, perfect. Okay, so there's a hi in the chat box. So perfect. So everyone knows where to ask the questions. Let's go through the agenda and then take it from there. In fact, I give you some insights certainly on this, just to give you an idea on what we will do now. I'll give you some insights into the basics behind the strategy. What we look for, what are the parameters? It's purely technical, so there's no fundamental drivers which we take into account. For example, as of now, right in this moment, so some of you might be surprised watching this now on YouTube, the recording, and saying, hey, this is a guy, usually he trades equities, and he's also talking about fundamental drivers, game changers, sometimes earnings releases, or stocks which have kind of a, not just kind of a, but a real true fundamental catalyst. So as today, for example, Merck, with the announcement that they are working or that there's a phase 3 state trial within medicine, which is not a vaccine here against COVID. So right now, stock is very, very hot. And you already saw over 3 million shares traded, something like that. I think close to 4 even. Average daily trading volume is 10 million. So you have a fundamental driver which attracts interest. And that's definitely something to take into account. Also when here using the input now from a pure technical standpoint. So don't be shy to take this here as a basic idea to get your formulation of a trading setup strategy going, take it from there, but still feel free to add components to it that you say, this is interesting once I plan to enter a trade, but still I'd like to see this and that, and this has to catch my attention respectively. That has to make sure that the whatever asset that might be, so we'll look here at the DAX, the CFD, respectively equity index. We can also do this with FX pairs. We can do this with stocks. We can do this with bonds, whatever. But what I motivate you to do is take this only as a basic idea, and the input I present to you now, and then use this input and make the strategy the way to trade the markets yourself. So use this only as a first starting point. So let's say, that being said, you will, first of all, learn something about pivot points. What are they? I'll teach you or tell you my little anecdote. Then we will get one step further. We'll have here a look at the Camarilla Pivots. They are a special form of how to calculate these pivot points. And certainly we will go through how to calculate them. And then at the end, I'll show you 3 different Camarilla day trading strategies, which are very, very short term. So that's why we named this here a scalping webinar. So personally, I mean, there's certainly several ways to define, for example, what is scalping in trading, or what is day trading. So day trading itself means nothing more than we open a position in the morning and we close it at latest in the evening, and we don't take any risks overnight. In case of scalping, some might say, well, we have plenty of trades within the day, in fact, and then have positions open and close them, and we have a high frequency here in terms of trading, in fact. So that means minimum 10 trades. So in my case, I have to say, I try to keep my trading frequency as low as possible, because everything else is noise. So, or most of it then turns out to be noise. So I perform at my best level, in fact, when I have max 3 trades per day, and that's already a lot. So that being said, with the strategies I present to you here, they might generate some trading signals depending on which style you prefer here. But in this context, I'll define this as scalping for my personal, or it's my personal taste here is that it is a scalping approach. But some might watch this now and say, well, scalping, in my personal opinion, is like, I don't know, I have minimum 10 trades per day. So that's definitely not what will happen here. So just to give you this update right before here. and that there's no not any kind of irritation, because there might be different definitions on how to define scalping, day trading, and so on and so forth. So let's give a quick introduction here to pivot points. So pivot points, first of all, go back to the old floor traders who had to quickly and effectively calculate potential support and resistance zones in their charts. And a pivot point itself is calculated based on the pre-daily high, the pre-daily low, and the closing price. So you only need those three, and then you take it from there. And simply said, what you could say is a pivot point. You probably have heard pivot in another context probably, but what we could easily say in this context is that if the market opens or trades above the pivot point, which we shorten here to PP, then it's considered a bullish sentiment. And if we trade below, if we dip below, stabilize below the PP, then the overall market environment should be seen bearish, in fact. And pivots, in fact, are quite often intraday turning points, support and resistance. And now my personal anecdote in this context, when I started out trading, the reason why I really liked pivot points and the concept behind them is because they're easy to use, they're easy to understand, and they make sense. So it's not just that you draw some lines into the chart, but what you will see is that the aspect that many traders, former floor traders, but also today traders still look at them, give them some kind of, let's say, self-fulfilling prophecy. So that means the more traders who look at these pivot points, the more likely it will hold. And that was something I observed right at the start when I started to calculate my pivot points. I'll give you here a link in a few seconds, in fact, to the Supreme add-on. You can download an indicator for the MT4, MT5, which you can then use in your trading, and where you can let the platform calculate the pivot points and they being displayed in the chart. Why do I mention that? Well, when I started out, it was very difficult, in fact, to get a free, and at the beginning of my trading career, a free indicator, which helped me to draw these pivot lines into my chart, in fact. So that being said, I then went out to a trading forum, and I asked a simple question to the guys I saw there discussing the markets, especially discussing actively how the DAX is traded. And I asked them, is there anyone who could help me out with finding an indicator? That was, to me, that was quite, it was a lot, because why do I say that? Well, because what you also see once you follow the interaction at forums, for example, and then people exchanging ideas, the overall, let's say, situation can heat up quite quickly, especially since we were talking about money. And that being said, well, people start to get very emotional. You have sometimes bullies who try to attack people, and it was right at the start of my trading career. So today I'm completely relaxed here, even if there's some kind of a bully and I'm trying to attack me for whatever setup I gave and it didn't work out or something like that, because I can just smile about this. But back then I was kind of shy, and so I asked the question. I was like, I mean, this is a very basic question, at least in my personal opinion, because pivot points itself are not that, yeah, let's say not such a deep thinking indicator you really need to deeply understand and study before using it. But it's just like you have lines based on the high, low, and close of the day before, and then take it from there. So I asked a question. I received a very nice answer, and that's one of the probably most impressive things which happened there, because I really took it from there. And every time I get a question from someone, and it doesn't matter if it's via Twitter, if it's via mail, or if it's below a YouTube video. By the way, if you have any questions, please feel free to ask them, not just here in the live event, but also below the YouTube recording. I'm really happy to help out just and answer the question, because I always remember that instance once my question was answered, and that's what I connect to pivot points. So beside the fact that I use them in my trading and how to calculate support and resistance areas, but it's also that it massively influenced the way I treat people in my trading once they ask not just trading related questions, but trading questions in life in general, for example. So that's just a little anecdote around pivot points. And so what I have here is a screenshot from the DAX. You can see that once I took the screenshot, we were trading significantly below 10,000. So it's a little older chart, but the concept stays the same. And what happens here is, in fact, that you display the chart, and then you just use the indicator. By the way, you can download for free on the website. Let me just go over here. So I opened already Admirals in this context, and then you go to platforms, and there to MetaTrader Supreme Edition. So I'll share the link below the recording, but also now in the chat box. Let me just see. Hello, Mark. So there's Mark. Are you still, by the way, just a question here, are you still in Australia, and how are things going there? So I've seen some interesting developments, let's put it that way, in the newspapers respectively, on Twitter. I'm not really sure if I can believe what I saw there. Supreme add-on. So there's the link. And now everything is this explained here, how to get the Supreme add-on here on this context. So free download for MT4, MT5, as you can see here. And then there's an explanation how to include it in the chart. You have most of the time, once you downloaded the package here of indicators, it's not just the indicator around the pivot points, but also on, for example, economic calendar, respectively, order history, and so on and so forth. Sometimes you have to close the platform and reopen it afterwards. And so then you can find here under indicators, you can find Admirals pivot. And then what you do is, in fact, you put it that way in the chart. You can already see it. I've displayed it already. And then you can see here that you can use the time frame you want to display them in. Usually you use the daily chart in this context. You can say here, for example, the calculation for the pivot point level, and so on and so forth, and just take it from there, and then you can display them within your chart. So this is the DAX from today. And I mean, it becomes quite clear right from the start why pivot points obviously are very interesting to use, because these levels here, they are displayed in the morning already. So you can get a quick overview of where support and resistance based on pivot points and the calculation the day before. Here, the thing is that what we can see is that the market really respects these levels. It's not just it's like you see a drop or a push and then point, boom, and then we take off from there, but it's the area around these levels. So at least it's very interesting to use them here, not just to locate support and resistance zones, but in addition to that, also to use them to calculate probably your potential risk rewards for short-term trades. That's also something which is of high interest. To put it differently, if I plan, for example, here to short the market with a drop to new daily lows for whatever reason, whatever might be the reason, I want, probably most of the time I wonder, okay, how far can the market expect to run on the downside? And in this context, for example, if I plan to short here with expecting S2, so the pivot point S2, what this is a little later, to break, well, the first target on the downside could be probably found around 14,000, what is this, 850 something? Yeah, 850 points. And then you say, okay, the risk is this, the potential chance based on pivot points is that, and then is the risk reward still favorable for a trade? Or differently, you can also say here, for example, that you plan to go long against S2. So you see the market pushes to this level, but does not break it, but can hold it. So you can probably say, I try to enter here in this area again, whatever might be the reason for you deciding to enter here. So a trader, for example, the first thing I thought in the morning was we had, based on the open range breakout setup, I used to trade it that way. We had a quite extensive mode on the downside. So also the sentiment looked very, very bearish to me. And that being said, resulted in the fact that I was thinking about, well, if we really break below the open range here on the downside, is there such a high chance that we will see a massive follow through and drop below 15,000? And then what happened in the past, in fact, wasn't, that's also true when looking, for example, at the aspect that we're talking about 15,000. So it's a round number. It's psychologically relevant here. You see a mini spike to new lows and then a quick rebid. And this could be a signal that you say, well, I trade an anti-cyclical long trade against that level. And by the way, in the morning, I made this, in fact, even though it was in German, but I wrote that probably we after holding or flushing slightly below, but then quickly seeing the rebid above 15,000, that is probably a sign that we are about to see a bounce. And then I was looking at the higher time frame. So here's the H1, was just like, well, probably 15,200. And I just realized that this was a bounce potential I saw there for something like 200 points, and was like, isn't that a little too much probably? Well, as you can see, it's not just that we pushed to 15,200, but even above that level. And right now, not seeing a heavier bounce against that level. But coming back here to pivot points now, if you decide now to go long here with a tight stop, you have also, again, a way to calculate your potential on the upside. So you could say, well, if we hold S2, the first target on the upside I should look for is in fact S1. So as probably a level where you plan to take some profits, or where you expect the market to probably stall a little, whatever. And so as you can see here, we pushed to that level and we had trouble to capture that level. So we found immediate resistance here. The market then a little overshooting, coming back, and then finally making it and holding S2. So what's the next target? If you now still have, let's say, a core position, you plan to trade around, well, what you could now say is, okay, well, from S1, I now expect the market to probably push back to S2. I'm sorry, not S2, a PP. So it's a pivot point in this case. So pushing higher here. So can be found around 15,300. So long thing short, pivot points are a very great way, in fact, to use in your trading, even if you do not plan, or if you're not that familiar. And that is also something. Technical analysis is to some extent also kind of an art, and there's many ways to draw a line, for example, and this is making things a little complicated sometimes. Especially beginners might feel overwhelmed by all the different ways how to analyze a stock, or how to analyze an index or currency pair, whatever, and just wondering, is this a relevant level? Is that a relevant level? And what I can say is that pivot points can help out here and help you at least make a first step. So it's not that I use them solely, but I'd like to see them also correspond with other technical levels I come across. So for example, if I look here at H1, as you can see, I have to update the chart a little, but as you can see here, somehow I see a stronger resistance around 15,300. Why is that? Well, if we zoom into the chart, you can see that this was a level in the past, which has been quite some time. I mean, we're talking about 3 months now, but still, this is a relevant region which the market somehow accepted or respected in the past. Here, the region around 15,200 is probably a better way to put it, since from a shorter term perspective, you can see here that we found, that was on today's the first, I think, Tuesday, after the first flush lower, we found support here in this area. So 15,200 after we dropped 15,400 in this context. This is another region we can look for. And now what I'd like to do is, in fact, I say, okay, do these levels I identified myself, do they correspond here with pivot points to some extent? As you can see, in case of the PP, that's definitely the case. In case here of S1, S2, not necessarily, but I can say that I could imagine, especially now with US markets coming into the market, that we probably make it to that level, and we find still stronger resistance here. So probably we're not yet done on the downside, and probably we're about to see a leg lower. If we now roll over before hitting PP here, well, next chance seems to be that there's at least a retest of this area. At least this is a level I would look for to see a bounce to if I have no long position, but instead I'm looking for a short play and another flush on the downside. But this is how you can use them. And again, as I showed you here, you can use the Admiral Supreme add-on to get them included quite quickly into your chart. And so let's come back now to pivot points, and here especially Camarillas. And before we start, let me just do the following. I just have to. Oh, that's okay. That's no big surprise. So just see here my scanner, Mara, Riot, Coin. All these stocks are going massively higher right now because Bitcoin is pushing higher, as I've seen shortly before I started the webinar. But let me just see. I just have to include here in my slide some stats on the pre-market volume in Merck and also in Zoom, by the way. So both could be of interest. Okay, that's interesting. Okay, so yeah, let's take it from here. So what are Camarilla pivot points? So they're a special way to calculate a pivot points here, in fact, and were invented by a bond trader, if I'm not mistaken. And so what they do is in the classic pivot point calculation, we can probably call this the classic way to calculate pivot points. The crucial pivot levels are the R1 and the S1. You might not have guessed this now after my quick, let's say, on-the-job introduction of them. Probably you thought that probably these levels around S1, S2, respectively R2 are probably of higher interest. But however you put this, in case of Camarillas, what you have is usually you have a focus here on the S3, S4, respectively R3 and R4 in this context. These are of high importance. And what you can now see is, I'll just display it here. So there we go. So what you can see here is how these levels are calculated. I'm not really sure whether we should really go through this now in depth, because I have to admit that the calculation itself is quickly done by, as you can see here, close, high, low. So these are the only three levels which you look at here, in fact, to calculate these levels. And then the only big difference in case of calculation pivot points and Camarilla pivot points is how you, in this case here, multiply it with which factor you use here. And this factor is most of the time it's based on the calculation, or the way the inventor of them, let's say the inventor of this way to calculate pivot points, Camarilla pivot points, the bond trader in this case, how he comes to his conclusion based on what works best for him, or what worked best in the market he was looking at them. You could certainly adapt them the way you need them, but I have to say that if we use Camarillas in this case, we should stay here or stand with the classic way to calculate them. And so long thing short, I mean, again, we don't want to go here through the way to calculate them, but we want to use them in our trading. Now, there's one little issue. The Camarillas are not included in the Supreme add-on. I have to add this here. So this is the classic way to calculate pivots. And now the bad thing is that I just realized shortly before I started the webinar, when I wanted to open my Camarilla indicator here. It's a longer story, in fact, but I lost my indicator on the platform. So I usually had it, and then there was a reboot here of my laptop, and that was the day when I lost them, and so that now made it impossible, in fact, to calculate the Camarillas. But what we want to do is, in fact, I go with you here through these three strategies, and then show you based on these levels. We want to adapt them then in this case, so that you get a picture of what you think about them, and how to use them, in fact. So that's a little unfortunate, in fact, but it's three different strategies, and they are all very, very similar to each other, in fact. So, and again, don't get them as like the holy grails of trading, but it's more like a basic way to attack the markets and get an idea on how to enter the market based on your personal fundamentals you'd like to see. Like, for example, get a news release which lets a stock, for example, see massive volume inflows, a gap higher or lower, and then use here the Camarillas, where the pivot points then to use the Camarillas to formulate your trading setup, how to get into the market, long, respectively short, depending on what you do make out of this information you just received. So scenario number one, in case of the Camarillas, what you want to see is you want to see an opening print between the R3 and the S3 in this context. And so what you do in case of a long setup here is you wait for a drop below the S3, and then crossing back and close above, you have a buy. So you can already see if we adopt this now and we make we use today the DAX, for example, the S2, and we name it S3 just in case, just to get an idea. Then what you have in this case is, in fact, you have your first setup. The stop in this case is also fully how can we say, automated is not the right word. So the stop is based on the Camarilla pivots in this case. In our case, as we will see, it's probably a little too long or too wide. So we can probably get a tighter stop, thus increase the position size based on the absolute risk we are willing to take for our trade. And in addition to that, increase our overall risk reward for the trade. So this is definitely something to take into account, and something where I say this is just again, an orientation, or this is just an idea on how to use Camarillas based on your or how to set your stops. But at the end of the day, they should make sense to you, respectively. They should also make sense in the overall market context. And then we have our target given by the levels the Camarillas deliver. So R1, R2, respectively R3. The same is true then here for the short side. I just made things easy here. It said vice versa. What does vice versa mean? Well, vice versa means that we are not talking about S3 in this context, but we are talking about R3. So that means you see the market opening here between R3, respectively S3. And then in this context, then saying, okay, if we now see a push higher, but the market crosses above R3, but then drops back below and closes below R3, then you have a sell. And then you have the stop above R4. So this is the high of this setup. And then you have the first target around R. I think we have to put it the other way around, right? So it's like, no, it's right. It's right. Exactly. So you have the first target S2, S1, S2, S3. Sorry, I was just thinking in my head, but it's the short side. So fine. So yeah, let's go back here to the chart. And the idea here becomes clear. So just ignore R3 and so on and so forth, since this is not pure Camarillas, but it's very similar to what we've seen here in the morning. Just assume that this is not S2, but it's S3 and it's Camarillas. So then you can see, we see the flush below, and then we see the market being bid again above that level and holding here above. So that might be the long signal then in this area, as I described, by the way. So I didn't use the strategy I'm here to explain this to you, but I used it based on the overall assumption that these are natural, or not necessarily natural. Some traders might probably argue with me here with that, and I think they're right to say it's not natural, but it's a level which works based on the idea of let's say self-fulfilling levels. So it's not necessarily natural, but it's more like a psychological things probably. But as I already said, so you see the flush lower and then we hold above. I wouldn't really go for a stop here below in this case, so the S3, but work with a tighter stop, given that this is a clearer sign that I might be wrong on the trade. So working with a too wide stop here will probably help you to here decrease the chance of getting stopped out on a trade where you're wrong. On the other hand, based on the overall width of this stop, first of all, the risk reward gets way worse. In addition to that, the position size, if you plan to hold a position based on a certain amount you were willing to risk for the trade, you have to decrease it massively since you're working with such a wide stop in this context. So that's one of the reasons why I'd like to adapt the stop here. But this is the idea. You get the idea. So this is for the long setup. The same is true here for the short setup. If we, let's say, flush to, let's say, R1, R2, whatever. And then, yeah, again, so I'm sorry. So, and then we have the first target, certainly. So we have S1, we have S2, I'm sorry, R1. It's too many. So target is R1, R2, R3. This is also something you can already see. You also need a certain level of volatility in the market. So because some of you might probably now say, well, that sounds a little too wide. It depends on how you calculate them. As you can see here, they're likely closer. So the Camarilla levels, that R1, R2, R3, S1, S2, S3, but still some probably might say, I use another way to take profits on this strategy. For example, going for a position here where I say, well, I have 1/3 at this level, I have 1/3 at this level, 1/3 at this level. Some might say, hey, you know what? I go for 25% here, 50% at R2, and hold the core here 25%, the rest, and exit then according to R3. This is also something where you can see that the basic concept here kicks in, and that I say, well, use this only as a guide, but still build a position which fits your trading style best around it. So then we have another scenario. As you might have guessed, in fact, they're very, very similar, in fact. So it depends a little on how you define them. We have an open price here between R3 and R4. So it's very special in this case. Probably we will see here in the later point how to use this. So it's very specific here, R3, R4. And then you have the long setup where you wait for a break above R4 and we close above, in fact. So this is a very bullish break on the upside. And you can, in addition to that, also calculate R5, R6. You can continue to use multipliers, as you've seen. Let me go back here again. So you can continue to work with multipliers on the upside, as you can see here. So this is 1/12. So this is 1/6. This is 1/4. 1.5 in this case, then you have 1.75 and so on and so forth. And that way you can, where this is then automatically done, you can calculate R5, R6 and so on and so forth. The same is then again true for the short side. Wait for a break below R3, and if we close below, then we sell. So it's more, as you can already see, and may have guessed, it's like a momentum and breakout approach. So you bet on the market continue to move in direction of the current overall advantage. In case of a long setup, you can already see we are opening above a certain level. Opening price, or in this case closing price from yesterday, we open above, and we expect right from the beginning of the trading session then further momentum coming into the market, volume which pushes the price higher, and with a break to new highs we continue to move in that direction. So you can see that it also makes sense from a technical perspective, respectively market, how can I say that, price action perspective. So like it's a momentum or a breakout approach, or betting on a trend, for example, for the trading day. And yeah, let's come here to this presentation. It's not a presentation. In fact, it's the first one was kind of a, well, we can call this probably a reversal strategy. That's probably that's probably the right way to put it. Where probably somewhat might probably argue it's kind of it makes the impression of kind of a range strategy if you go into depth into the strategy itself, while the second approach is the momentum, respectively trend following or follow through approach on this case. So in case in fact here for today, that doesn't make sense to now look at this. In fact, it makes more sense to get here to scenario 3, so that you understand better what I'm talking about, the reversal approach. So here we have the open price, which is between S3 and S4, and then we have the long setup. We wait for a break above the S3, so that the market moves higher for the day. And then if we close above, then we buy with the stop below the S4. So very similar to the first one, in fact, this approach, even though, as you can see, there's a differentiation here between the opening price. So in the first case, it's a very wide range you look at. In the first case, as you may remember, it was R3 and S3. In this case here, it's more specific. It's between S3 and S4, and then you play the trade here for a push higher then with the same targets, in fact. So S4 target R1, R2, and so on and so forth. The same is true certainly here for the short setup. So it's the same idea, in fact. But if we look here, so this is in fact exactly what happened. So again, it's not S2. Let's make it an S4, S3. So we have here the S4. We have the opening print, which is in fact slightly above. That's optimized this for all cases here. So it's slightly above. What you need to see here, opening price, also you can see it depends on what is the trigger price. So some might argue and say, well, isn't the opening price here? So or something like in this case 1 a.m. EET in this case. So it's 12 a.m. German time, Central European time, respectively 11 p.m. UK. So isn't that the opening print? Well, you can certainly argue that way, but I prefer to talk about the open as a moment once most of the volume pours into the market, and it has thus, that being said, has a higher significance given the overall volume which is traded at this respective level. So that being said, what I know in case of the DAX, and it depends on what market you then look at. You can, if you know, use this here for the S&P or Nasdaq, for example. Well, certainly you look at 3:30 German time or 2:30 London in this case for the spot market to open, Wall Street to open. But in this case, my opening price and my reference in this context is in fact here, it's 9 a.m. German time when Xetra comes in, and most of the volume is traded. As you can see here, we already know these levels before because they are calculated based on the high-low closing price of the day before. And so if we then open here below the S3 again, imagine that to be a 3 and this 4, then we have our setup. Now let's assume that we have the print here below the S3 in this context. And then as you can see, we see the market pushing lower, yes, but then being quickly rebid and holding above S3. And this is our long signal. Again, very similar to the one which we described at the beginning. We are working here with a stop in the classic version, the basic version, let's say, below the S3, respectively, in our case here for the Camarillas, the S4. Still, that's a little too wide. And even if the stop was somewhere here, I still consider it to be wide. I'd like to have it right below the intraday lows of the day, or the Casa open lows in this case, because if we drop them, if we make new lower lows for the day, then I just don't want to be long anymore. Respectively, if I make higher highs in case of a short setup, then I just don't want to be short anymore if I enter the market that quickly and betting on a bounce, in fact. And then, well, we take it from there. So we have the PP, we have the R1S, R2, and so on and so forth, and manage the trade accordingly. And in fact, that's it. Yeah, in fact, that's it. So I hope you enjoyed the webinar. You enjoyed the content around pivot points. I just hope that you understand them. That you appreciate the way these points are easily calculated and displayed in the chart, and help you to find an advantage in fact right at the first glance. So you look at the chart and say, well, as a rule of thumb, everything above PP is bullish, everything below PP is bearish. It's especially worth greater attention from beginners who just look at the chart and just think, well, this is candles, this is very abstract, I don't really know what to make out of this. And pivot points can really add some a true help here in this case to find yourself in the marketplace and help you to orient yourself. And so then, well, you have a great way to identify support and resistance zones easily, and based on them, you can not just determine the intraday trend buys, but you have also clear levels to risk against, respectively to trade against. And once you see that they're respected, because due to the fact, even though it's not natural that they work as support and resistance, it's more kind of a self-fulfilling prophecy. But given the fact that the trading is most of the time a very psychological played game, then it definitely makes sense to keep these points in your trading and use them as an orientation in your trading and to formulate your trading setups based on them. And oh, that's bad. One second, please. I just have to add here. Or it's not that I want to add them, but instead, what I do is we go here via the Forex and CFD tab, and next Wednesday you'll have a next webinar with me, another webinar with me, and it wasn't a coincidence that we used here DAX 30 became the DAX 40, and it will be a special on who are the new names in the DAX here, why this is the case, why there was no affection, in fact, of the performance index status in the case, or the value. So we still trade at around 15,000. Let me just see. What do you trade? Yeah, 15,200 points, something like that. And that's interesting. I just have to look a little more because I have Zoom open here, and Zoom I'm just dropped into the open flushed to the level I was watching, but sees further action on the downside. That's interesting. But the DAX 30 becomes the DAX 40, and that will be the topic of the next webinar. Next Wednesday, 2 p.m. London. It is the, as you can see here, 6th of October. Please register on the website. If you watch the recording now on YouTube, head over admirals.com, and then here educations Forex CFD webinars. And this is not just the hot topic webinar we will have next Wednesday, but there's also others. Forex trading for beginners, for example, with Paul next week on Friday. Here's the start the trading day event with Marcus every day. So you find all the webinars which we plan to hold here. Also the crypto webinar, which I will hold on the 20th of October, for example, on Bitcoin. You can find all them here on the website for further information. And so that being said, we can skip this and go over here to the page where you can find all the contact details. So if you have any questions, feel free not just to check the website and try to find an answer yourself there, but in addition to that, use the chance to give the sales and service representatives at Admirals a call. They look forward to hear from you and ask them all your questions. And subscribe to YouTube. This is something I mentioned already. I also mentioned that we have a fully regulated broker. That's why we have to finish here with the risk disclaimer. And in fact, please read it carefully. That's it from my end. I wish you all the best. Happy trading. Watch your stops. Talk to you again next week, Wednesday, 2 p.m. London, 6th of October. And we talk about the DAX turning 40-ish and the DAX 30 becoming the DAX 40. That's it from my end. Have a nice weekend. Enjoy yourself. See you next week. I look forward to it. All the best. Bye-bye.